Hello, Theo traders. Gianni DePoci here. Today is the 28th of June, 2024, and I'm filling in for Don Kaufman on the Friday recap video. It is the last trading day of the week, month, and quarter, and markets did not disappoint over the last couple of months, but we are ending the second quarter with a bit of selling. Stocks are probably set to go out near the lows of the day, but looking ahead into the start of Q3, I'm seeing some promising signs. I don't think it's all doom and gloom on the horizon, although I do generally maintain my forecast for a pullback in the 10 to 15% range, perhaps in Q3, but I would say by the latest by Q4. But if you take a look at the S&P here, we started off the day with a nice rally following inflation reports that came in at estimates. The core PCE, the personal consumption reports, which is the Fed's preferred metric, by the way, because it allows for substitution of consumer goods and services. But that came in above estimates, showed that inflationary pressures at the least aren't accelerating right now, despite them being above the Fed's preferred definition of price stability. So right now we're kind of seeing selling across the board. If you take a look at the NASDAQ futures here, down as well, but not as much as the S&P. The Dow was showing some leadership earlier in the day, but now it is leading to the downside. And my biggest concern with respect to the Dow here is that it has not made a new all-time high since April, and that needs to change quickly. And I would argue that it needs to change very quickly with respect to the beginning of Q3. So for me, it's new all-time highs or bust when it comes to the Dow. But underneath the surface, like I said, you are seeing some encouraging signs. Despite broader selling in the market, chips are still up on the day, and that is a pretty good sign. Nvidia, if you take a look, is still up on the day. It's well off the highs that it printed on Friday here, but still consolidating. Now, I kind of agree with Don in terms of the future prospects for Nvidia. In the sense that I don't think there's a lot of upside in the immediate term. I think the move has been exhausted. I wouldn't be surprised to see prices spend an extended period in sideways consolidation. And I would argue that such a period of consolidation would actually be very constructive for this stock and allow it to build a new base to eventually, potentially, make new highs. We kind of saw that happen here in that period between March and May, and then even last year in that extended consolidation period between July and the end of the year. So prices don't move straight up, just like they don't move straight down. But we need to see a break and a pause, and I think we'll get that in NVIDIA. Staying on the chip front, you did see a nice rally in advanced micro devices to start the day, a bit off the highs, but my favorite semiconductor play, and it's a name that we shared in the TheoTrade chat room on the long side, is Amkor Technology. We've been long this one for a couple of weeks. We have an upside price objective in Amkor in the $45 area. We got long on the close above 36.09 for a quick swing trade on this one, and it seems to be working in the right direction. But if we scan the broader tech landscape, take a look at Apple down, but again, when you have to zoom out and take a look at the weekly and the monthly chart of this large cap name, it still looks bullish. It's capping off a strong month, and I do think that Apple will eventually rally as high as 250, 260. Google made a new all-time high yesterday, but it's paused today. We did initiate long positions on Amazon a couple of days ago. We've seen some nice initial follow-through on that one. So I still think, however you slice it, the large cap tech names are looking good. If you look at Microsoft, that's really close to the upside price target we shared a couple of months ago in the 460 area. The only stock that I'm not really feeling that great about in the Magnificent Seven remains Tesla. You did take out that high from April, but I'm more keen on seeing that high from February exceeded. You could even be forming a little inverted head and shoulders pattern of the sort, or even a rounding bottom. But I'm going to need to see that high from February, late February, early March exceeded in order to signify that we could see some upside momentum. Now, I'm going to pivot over to the bond market. And for those keeping track at home, in theory, a flat or soft inflation report would be bullish for bonds, but that's not how we saw the market react today. On the contrary, we're selling off pretty hard here, and you're seeing duration lead to the downside, which is a bit of a concern with respect to the bullish case for bonds. Now, granted, the trend has been bearish for a couple of years, so this really is apparently continuing in a bearish manner, and we know that trends eventually, they tend to continue in their underlying direction. But we have this ascending price channel here. We're threatening a breakdown from this pattern. These are continuation patterns. Take a look at the weekly chart. Not really an appetizing week for bulls, but I do want to comment on the nature of the yield curve here, because what we're seeing is we're seeing long-term rates rise faster than short-term rates, and this is serving to re-steepen the yield curve. And this is actually a good thing, I would argue, with respect to the prospect of Fed rate cuts later this year. Whether it's going to happen in September or November or not at all really doesn't matter. All I'm saying is that the yield curve remains inverted, and at some point the Fed is going to move to re-steepen the yield curve and bring us out of inverted territory. And when that happens, the higher that long-term rates are at that time, the less they'll have to cut to re-steepen the curve. Now, that's important because I think we've entered a new period of secular inflation, not hyperinflation, but just steady, persistent, stubborn, sticky inflation. I don't think it's going away. And a lot of that is contingent on crude oil, which I'll discuss in a moment. But, if long-term, if 30-year rates are, around 4% compared to 5%, that's quite a big difference that the Fed would have to cut to re-steepen the yield curve, if long-term rates are lower versus higher. So what I'm arguing is this actually gives them more firepower, if necessary, to combat a an economic pullback that could be more severe than otherwise. And keep in mind that a re-steepening of the yield curve does often coincide with a slowdown of the economy. We did have a Q2 GDP revision this past week, and it came in above estimates, but did still show that the economy is slowing its growth compared to the fourth quarter, of 2023 with respect to the first quarter of 2024. So the economy does seem to be slowing. It's still growing, but not as fast. Inflation is still greater than economic growth. But let me go ahead and jump over to the energy market. Take a look at crude oil here. You did make a new multi-week high. A little bit of selling into Friday. Overall, on the weekly level, not a bad week for crude oil, but a lot of the energy names, it's kind of a split tape. Not really seeing anything that gets me too excited when it comes to energy stocks. But in terms of the prospect for an economic slowdown, you're not going to want to see energy accelerate to the upside. In that type of situation, what we'll probably see, if the economy does at least plateau here for the next few months, is we'll probably continue to see a sideways market in energy. If energy starts to accelerate to the upside, it's a signal that inflation's coming back, and it could even let us know that, hey, maybe there is more economic demand than we think, because the economy still runs on energy, even though there's an apparent transition into cleaner forms of energy. Crude oil is still an integral part of the economy, and we want to see that come down if there is going to be an economic slowdown. But if it bids, then I would look for it to continue higher. Let's take a look at precious metals. Gold and silver fading here into the close. Silver outperforming a bit. We did roll the contract to September in the futures market, but we've been long some precious metal names like Anglo Gold Ashanti and Agnico Eagle Mines. They're kind of going out near the Agnico Gold's down a little bit, but Anglo Gold Ashanti closing out near the highs of the week. So I would keep an eye on precious metals. And even if interest rates do spike, we've kind of seen a recent trend lately where precious metals don't seem to care that interest rates are rising. They've been bidding regardless. Take a look at crypto before we look at a couple individual names. It does seem like there could be some further downside risks in Bitcoin and Ethereum. I wouldn't be surprised if Bitcoin fell back to the high $50,000, low $60,000 area. Ethereum could fall to the low $3,000 area, but I'm still pretty constructive on what's happening in some of the names in this space, especially when it comes to Hut 8 mining, capping off a really strong week. MicroStrategy looking a bit more defensive, down 7% here on Friday. But we do have that a stop loss on an existing position on this gap from a couple of months ago. Some other strong names that we've seen to cap off the week, Arista Network. So when people say it's just a couple of names in the tech space, I point them to a name like Arista Networks, a large cap tech stock. It looks really good, making a new all-time high. Despite the fade off the day's high, set to close out near the highs of the week. So I think this looks pretty good. You also have names like Altair Engineering, which are consolidating near the all-time highs, and also CrowdStrike, a local favorite here with myself and other members trading this strategy here at TheoTrade. Been consolidating near the highs, so I like that. Vico Instruments was up nicely, giving some of it back as the market continues to sell off into the close. Keep in mind that a lot of the price action we're seeing today has to do with rebalancing from institutions. We're at the end of the quarter. There's going to be some performance chasing. There's going to be some selling of losers. There's a rebalancing taking place now. So important not to put too much stock into the price action of one particular day and to kind of maintain that broader horizon. I am seeing some strength in consumer discretionary, name like Boot Barn Holdings. We've been long this one, close to our upside target of 136. If you look at the consumer discretionary sector, seeing some selling today, but again, I'm going to go back to Amazon, and the fact that Amazon just broke out to a new all-time high, I think bodes well for the state of the consumer, better than others would like to give it credit for. And then you have names like Burlington Stores, which are consolidating near the highs. So you're seeing some decent setups in the retail space. But then, of course, you have names like Nike, which are getting thrashed. There's a realignment taking place in the retail consumer discretionary place. And a lot of this is normal. A lot of this has to do with trends. Consumer trends are always evolving. And if you're not on top of those, you also have Walgreens that had a really nasty week as well. Well, I would, kind of put this in the more consumer discretionary farmer, when it comes to pharmacies and whatnot, but technically falls into the retail category. So no matter how you slice it, I think there's some, opportunities mounting in this market, and there's some areas you want to stay away from. But one area that I think we want to really pay attention to is the biotech space going into the third quarter. When you zoom out here and take a look at the, the base that this index has built, barely above its highs from 2015, and there's been so much innovation in healthcare and biotechnology with respect to weight loss drugs, cancer treatments, other, cures for various diseases and illnesses. I think there's a lot of potential in this space. So I think this could be a big theme under the broader umbrella of healthcare going into the third quarter. Healthcare is the second biggest sector in the S&P 500 behind technology. So as tech looks extended and overbought and due for a consolidation, you have a nice base in healthcare, an ascending triangle here, so to speak. And if you zoom out and look at the longer term chart, it's basically been consolidating just above former resistance, now support. So this is all constructive price action. We've been sharing ideas with members of TheoTrade in the chat room as of late, and I think there will be a lot of opportunities that continue to present themselves in the healthcare, biotech, and pharmaceutical space over the next couple of weeks and months. So that takes care of what I wanted to review with you today, everyone. Thank you so much for watching this video, and I hope to see you in the TheoTrade chat room.